Good afternoon, everybody. Welcome to TraderMerlin Show. It is your Monday edition. An exciting week with, well, some earnings announcements and just it's always an exciting week, damn it. Yes, there was a hurricane. I saw Jimmy T saying hurricane in SoCal. Yep, I did. I was going to show you guys some pictures of the devastation that happened to my place. So I will show you this real quick. Now, brace yourselves. I know this is going to be disturbing for some of the viewers out there, so be careful. Watch your own risk. You can look away because the damage is just it's devastating to my place. Here you guys go. Yeah, we will rebuild. I'll come back stronger than ever. Banana tree taken out. Anyway, yeah, I think in light of what happened in Hawaii, which was a lack of information, a lack of alerts, a lack of many different things, California really overdid it. I received 5 messages from the local authorities, from electric, from water, from power, and honestly, I have been through hundreds of storms in my life that were stronger than this. It was actually just nice, consistent rain all day long. Had some mild winds, so yeah. And I apologize. I know it's probably insensitive because I'm sure some people did suffer some damage, but they made this seem like the apocalypse. And people from other parts of the United States calling me like, "Hey, can you be okay?" It's like, it's drizzling outside, man. It's not a big deal, at least where I was at. So anyway, I hope the rest of you fared as well with minor damage to your property. So I'll go away from the damage. The topic for today is going to be time to buy Tesla. Now, I'm not sure what the call was from Lisa on Tesla, but I'm saying that you probably thought it was a decent buy at that price point. So we'll run through some of the things that I guess make an argument to buy Tesla. It was actually spurred from Todd, and maybe this is because of my comments on Friday's show. Todd says, what are your long-term thoughts on Tesla? Is it a buy at 220? Well, that came in obviously before the market because Tesla's long past that. So I'm going to try to do multiple things here. We'll come up with analysis on Tesla going forward, at least macro picture, kind of what are some of the big driving forces, and then I'll sprinkle on with that what I did with my Tesla trade today. As you guys know, I told you I had 2 Tesla puts that were exercised at $227.50 on Friday, which I collected a nice amount of premium. I collected $550 worth of, where did I get on premium on that one? I collected $125 worth of premium on that one, and that was a trade that I put on in the middle of last week. So about a little over 0.5% rate of return for I think 4 days. Not too bad. So I'm going to start there. We'll bring up the chart of Tesla TSLA. Huge pop today, up 7.33%, and a lot of this coming on the heels of analyst comments and speculation about what this Cybertruck might do. And I think that really that's one of the major catalysts for it going forward, and we'll look at that here in just a sec. But I mentioned I would discuss damage control with you, and some of you said, well, what's damage control? Could you explain what that is? So anytime I sell a put, which is one of my preferred things to do now, I love selling puts and collecting premium. I'm selling those puts with the expectation of I'm okay to own it at that price. If it gets that price, I'm okay to own it. And I'll show you the Tesla chart here because when I made that trade, it was back in here. Like it wasn't even at 227. So I thought I'd be safe at that number. And then you notice on Wednesday, Thursday, and Friday, it cratered. And we ended up closing on Friday's session down at around 215. So at that point, based off of the 227 strike that I had sold, I was down about $12. Now, I did collect $1.25 worth of premium. Wait, hold on a second. Yeah, Tesla was $1.25 worth of premium, which would have made my average price $226.25. Now, the line you can see here in red is where my strike price, right, my cost basis was. But if you take away the premium, it would drop me even lower. Now, what I had to figure out here is what are my thoughts on Tesla, right? What was I thinking as far as where it might go? And I'll be honest, I thought today was going to rally. I thought we had a hammer formation on S&P, we had hammer formation on NASDAQ, even though it was on a Friday session. I thought we would see a little bit of a rally today, and we did. We got a nice little rally, 1.54% for the NASDAQ, S&P up 0.61. So great, that helped me out a lot with my positions. The question I have to ask myself, though, is how long do I think this is going to rally? Because typically when I'm put shares, I'm generally going to try to be optimistic with that position. Like, okay, where do I think it's going to go? Maybe I'll set my sell some calls against that, do some covered calls at a much higher strike price. So if I believe that Tesla is going to have a huge rally from here, then obviously I'd be looking for, I'll put a line on here, maybe I'm going to go up here and sell those calls at 240 if I think over the next week or two, depending on how I want to structure this, right? Do I want to do it for a weekly option trade, or do I want to do it for monthly, which I typically do monthlies? So maybe I'll go out here and go to the 250s and sell a 250 call. And that way I'm allowing this to have some running room, right? More of a bounce, have it rally up, make myself some profit along the way. And if it gets taken away from me, if it goes above 250, then fine, is what it is. I don't care. I would made all that gain as well as the premium I collected. However, I'm not very confident, at least in the short term, that you're going to see this big pop in Tesla. I think we'll see a bounce, but I just don't know how high we're going to go. So I did something that I don't normally do. When I'm uncertain about which way things are going to go, and nobody ever knows for sure, but I like to just kind of put myself on a probability spectrum. If I think things are going to stay right where they're at or oscillate above and below it, that's the strike price that I'm going to be selling. If I think it's going to have a huge rally, obviously I'll sell the calls much higher. So in this case, I'm really not that certain on where markets are going to go, let alone Tesla. And we'll look at some of the longer term perspective for Tesla, but I don't plan on holding this that long. What I'm looking at here is I sold the 227.50s. Now, remember, that was my strike price. I already collected $1.25 worth of premium on the initial put that I had sold. On the calls that I sold today, I collected $5.50, right? So $5.50 plus $1.25 is going to be $6.25 of total premium I will have collected on this position. Now, that's going to be roughly 3% worth of gain. And granted, this option that I sold at the 227.50s is for this Friday. So all in all, I'm okay with it. If it gets taken away from me and Tesla keeps rallying from here, fine. I will have made 3% in about a week and a half on Tesla. And I'm okay with that. I know that some of you are probably thinking I'm crazy for that one, but I know that I think it was Lisa or Lori was asking me last week on, hey, what are you going to do damage control? Wanted to be clear and explain exactly what it was. I did the numbers, and if Tesla just continues to rally from here, whatever, I won't make anything else on this trade. But I think you'll probably see it chop, probably another day or two up, and then I think by Friday it'll probably give some of this back. And we'll explain why this popped today. So I thought I would play it very carefully. Kind of lock in that trade, knowing I'm going to get some nice profit on this one. So I did the 227.50s, and that it took me a little bit of thinking. I actually thought that I was going to go higher. I thought maybe I'd go to the 230s, 235s, but I decided to just play it very conservative, go 227.50s, and if it rallies, I'll leave money on the table. So there you go. Just wanted to share that with you guys so you know where I stand on that specific trade. Now today, there's a lot of speculation about the Cybertruck. And if we go back to our initial, graphic that I created for today, gotta love it. I even love the way he's kind of pointing at Tesla on this one. Kind of cool. Tesla, we got a couple good things going for it. And I would say your number one piece right now is going to be the Q3 release of the Cybertruck. The media and Tesla and Elon Musk are doing a tremendous job of hyping this thing up. I think you guys have seen they're leaking little pictures of trucks, pictures of the Cybertruck on trailers and going off-road. So they're just kind of slowly leaking this stuff to generate anticipation, to generate excitement. And I have a few friends that are like, I don't care, I'm buying that thing as soon as it comes out. So they're creating all this demand. And because it's so unique, it's the only real vehicle of its type ever, they'll probably get a good price point for it. And I think they're going to sell a ton of these things. So I really think that your second half of the year for Tesla is probably going to look pretty good. They also are updating what's the Model 3 they're going to release in China. And there's a lot of hype around that, a lot of marketing going into the upgrades being made to that one. I think it's called the Highland, the Model 3 Highland, I believe is the name of that one. The Cybertruck is still ugly. I agree with you, Big Eb. It's certainly not something I look at and go, I gotta have that. But I will admit, I am intrigued. I'm interested. I want to see it on the road. I'd like to know someone who has one so I could go for a ride in it and see how it is. After having experienced the performance of just the Tesla, a friend of mine has a Tesla Plaid, which is just an absolute monster. Curious to see what the performance of that truck is. If you look at what Tesla has done with the charging stations across the U.S., I think that has given them a tremendous advantage over other vehicles. Now, you're also hearing about some of these other car makers that are saying, hey, we'll adopt Tesla's technology and we're going to use your same charging port, so now all of our vehicles can use your charging stations because you've built a network for it. That's pretty phenomenal in my mind. There was an article I read recently about a guy who bought a Ford F-150 Lightning and tried to drive it across country and ultimately had to leave it at a dealership and get a gas-powered car because there just weren't enough charging stations, right? That's a huge problem. It said service sucked, battery life was nowhere near what they thought it was going to be, and that's Ford's first attempt at a truck. Tesla's got the car down, right? They've got the platform and the vehicle down, so all it is now is just make it in truck formation. I think it's pretty good. Lawrence, we test drove the Tesla Y and X a week ago. They're fun. It's different, right? You really have to kind of put your preconceived notions of driving a car on the back burner because the regenerative braking, when you let your foot off the gas pedal, it automatically starts braking. And I remember, like when I drive my car, I'll stop, I don't know, just not stop, but I'll take my foot off the gas, 50 feet before the stop sign just to kind of coast for a little bit, then I hit my brakes. Well, when I did that in the Tesla, all of a sudden I let my foot off the accelerator 50 feet before the stop sign, and 40 feet before the stop sign, I stopped. I was like, wait a minute. I didn't want to stop. It's very, very, very different. It takes a little time. Tesla with the ludicrous mode. I love how they use the lines from Spaceballs. Put it in ludicrous mode. We're ludicrous speed. Anyways, that's part of the reason I'm bullish on it. Now, to be honest, I'm hoping that my shares don't get taken away this Friday. If they do, totally fine. If they don't, I'll probably sell calls again, and I'll just inch it up higher. As you guys know, Tesla can move so much in a very short period of time. Today's not an announcement, but you had a couple of analysts really raise their expectations of Tesla, thinking that they're going to start to do better at the tail end of the year. And for the same reasons I do, I think that the Cybertruck's going to be a really big hit. I think it's going to be sold out anywhere you can get. I think you're going to have people paying a premium just to get that thing. You'll probably have people do like they did with the mid-engine Corvette. You guys might remember when the mid-engine Corvette came out, there were people who were buying them from the dealer right away, and because they were so scarce, so rare, they were immediately flipping them on secondary sites and causing a huge markup to those vehicles. I think that's what you're going to see for Tesla. And if Tesla's smart, just raise your price a little bit, right? Instead of the scalpers making the money by buying your vehicle and selling it, you make the money, and that could help their bottom line as well. So you've got those two things I think are going to be a great catalyst for it. Obviously, there's more and more competition coming into the space. You had, I think General Motors today had to recall part of their Cruise fleet because it crashed into one of their driverless cars, crashed into emergency service vehicles. So they got a big slap on the wrist and had to pull back their fleet. That's not good for General Motors. The Lightning truck, not really good for Ford. So it's starting to look, when you look at the spectrum of vehicles out there, I'm sure there's a lot of very good ones. However, having all this competition to Tesla get slapped around and really some, negative feedback or comments about their vehicles is just better for Tesla. So I would say, is now the time to buy Tesla? I would say yes. I would think that this is probably a decent time to buy Tesla. If you notice that where we've come from, right? We can go out here and I'll go from the peak, which was on June 19th, to the bottom we hit on Friday's session, down 29%. That's a pretty decent pullback. Granted, it is probably relatively overvalued. I'm sure that Tom Barr would tell me it's overvalued. The PE is too high. You're probably right. But again, I think that this is a different type of company. I believe that I still stand by that this is not just a vehicle company. There's just too many other components to it. The question is now, after having popped 7% today, is it still a buy? And I think if you were going to look at this as a buy situation, you want to have some stop losses in place below the low that we achieved just on Friday's session. Unfortunately, you had a big rally today, but I do think it's a buy. I think that it's a buy, but I would scale into it. I wouldn't buy everything all at once. I see was that Big Eb said that? Who bought the tranche? Den says bought small tranche on Friday. Good. I just don't know their bottom line numbers and all the things they're doing. I mean, you can look out here at their earnings, and their earnings have been pretty damn good. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 consecutive quarters in a row they beat their earnings, and their next one comes out on October 18th. So they're doing pretty good. They're turning a profit. Things are starting to look, better and better, and I think that'll just spike even more once that Cybertruck rolls out. So yes, I think their PE might be a bit high for right now, but I do think that there's more upside potential here, especially given their dominance in the space. So to answer the question that came through from Todd, is do you think 220 is a buy? I do think 220 is a buy. And I think there's some people in here also that were talking. Was that Lisa or Lori earlier? You're saying Lisa got the 220s, 220 puts on Tesla for next Friday. Are you long those puts or did you sell those puts? You probably sold those puts, right? I'm assuming that you were using that as maybe a buy point. P for the stock should be different. Yes, I do think it should be different. Let me real quickly go out and look. Unfortunately, I didn't have time to prep all this and look at the PE ratio for Tesla today, but I will do that real quick, and maybe we can look at some of the other competitors out there. But it should be different, right? This is way different than a General Motors or a Ford. I just think that there's just too many other business components to it at this point. So TSLA, and bring up and show you the PE ratio here real quick. Okay, good. Yeah, that's what I thought you meant. I didn't think you were going to go directional. 220, and in worst case, right, Lori, they just expire worthless. Or sorry, Lisa, they expire worthless. All right, for some reason it does not want to let me bring up Tesla over here. TSLA, give me Tesla. So you got a PE ratio of 75, which is pretty high. I mean, if you look at the average S&P ratio, you're between 15 and 18, somewhere in that. So definitely much higher than most of the competition. We'll look at General Motors here real quick, which I have another question on General Motors. They have a P ratio of 5. Ouch. Liz says, I'm short Tesla 220 puts for this Friday too. Awesome. Good. Lori, I have short puts on Tesla at 105 for September 15th or 205. I think you'll be fine with those. I don't think, I think that the bottom is in for the short term. I think it is. Tesla is still in an aggressive growth cycle, so hard to say it's overvalued. Correct. And when you look at the batteries, when you look at just their dominance in AI space right now, and we've talked about how Google has a share in Waymo, right? Or Google owns Waymo. You could make the argument that Google's in a good spot as well, but Waymo is a different technology, right? They're using LiDAR, whereas Tesla's doing camera work, and there's so many cameras on each vehicle that every one of them is just this amazing data source that they're miles in front of anybody else out there. And yes, there are other EV companies that are doing this, but let's see who else. Let's look at Ford's PE ratio real quick. So we had 5 for General Motors. We had 70 something for Tesla. 16 PE ratio for Ford. Let's go to, how about NIO? Got another EV company. Just checking out the EV stuff out there. Negative 1.66. They ain't making no more money. They're losing money. How about, I guess, TMC. No, not the one I was thinking of. Anyway, I'll leave it there. Ever watch Wham Bam Tesla? No, I have not. Was it a website, Margaret? I should probably check that out. Is it accidents that have happened between on Teslas? Anyway, long-winded answer to Todd's question. I'm bullish on Tesla. I think that the hype around the Cybertruck is just going to be one of those things that just propels it much higher here going forward. The question is, where is it going to head? Or what levels do we ultimately hit on this one? So, Elon Musk looks nice and smug right there. There is a couple things. They did have a data breach. There was a hack from 2 former employees, leaked some data information, but I don't think anything that's really scary for anybody who's a shareholder of Tesla. So where are we headed? Well, if you look at just this uptrend that's been started back since the beginning of this year when we were down about $102, I certainly wish I would have held my shares I bought back down here at the bottom. We're making higher highs and we're making higher lows. The obvious roadblock here is this 306 to 317 mark, somewhere in there. That's the obvious milestone we need to get through for anybody who's really bullish on it. But honestly, between our current price, which is $233 in the after-hour session right now, and 306, you're looking at about $70 worth of gain. So that's obviously tremendous potential just in the next accelerated move. For some of you Elliott wave technicians, that might be your leg 5, phase 5 of that wave. Oh yeah, there you go. Let's look at Lucid's PE. Thank you. I couldn't think off the top of my head about the different LCID. Lucid. I actually saw the Polestar. Went to the mall this weekend. Yeah, they got no PE ratio because they're not making any money. They're losing $1.64, so no PE ratio there. But you can imagine, as soon as this thing gets to like a penny, the PE ratio is going to be off the charts, right? And this is where PE ratio can be really misleading. PE ratio, you have a high price for Lucid, $6.26. They're not making any money, so it's, infinite PE ratio. There's nothing. If they got 1 penny, you have 1 penny worth of earnings for $6.26 of share price. This is going to be a very high PE ratio. You'll be looking at what, 600 and if it got to a penny, you'd have a 626 PE ratio. That'd be way too high. So as the earnings start to get better and better, those PE ratios will drop, but then you also have the driving up of share price because of expectations about things like Cybertruck or the revised new Model 3 Highlander they're putting out in China, or just new upgraded systems and new products. They come back with the Roadster as well. That could be pretty big. You got the Tesla trucks and semi, which have been really interesting. So, Lisa just brought it up. I have to ask the Tesla truck. I know from a female view, what's the male view on the looks of their truck? Oh, I thought you meant like the actual semi. So the semi truck is actually really interesting as well. From a male perspective, I think most people here looks kind of ugly. It loses its. I think that my favorite vehicle, one that I just sold a couple years ago, which I kind of wish I didn't, but my favorite vehicle of all time is a Porsche 550 Spyder. I think that is the sexiest vehicle that's ever been made. Granted, there's some really nice Ferraris, but I'm just a Porsche bias. That's the James Dean one. I had a black one, 1955 550 Spyder. Beautiful car, and what makes it so appealing is the curves, the sleekness of it. It's just so, just so beautiful. This loses all that with that Cybertruck. It's just this rigid cubed box thing. I just don't think it's attractive, but one thing in designing that's really important to know is there's a mantra with all designers: form and function. So the form of it, I think, is ugly, non-appealing whatsoever. The function of it might be much more so than something like the Porsche 550 Spyder, because you've got your frunk, right? You got your trunk space up front. You got a flat bed, bulletproof windows. You got just a lot of different things you can do with that vehicle. So I thought, it's different strokes for different folks. I have a couple people. I know there's actually a couple here that are very excited about the Cybertruck and already have orders for it. So good for you. Great. I've been long Polestar because I like that they don't have to do the infrastructure build out like many other EVs. It's already in place because of Geely and Volvo. Yeah, so that's the Volvo one. And they were actually a nice looking vehicle. Looked at them for a little bit. They were at the South Coast Mall. There's actually a store inside the mall that has 4 of the units in there. They didn't have the 8. I think the Polestar 8's the one that I really like. Let's see if I can share that for you. I'll go to the Polestar vehicles. One sec as I bring this up. There you go. Our future is 100% like this. So the Polestar 2 is the one that they're really pushing at the mall over there. But I'll show you some of the other ones. Except though. Oh boy. 9. All right. Hopefully that works. Okay. There you go. South Coast. All right. So there's your the Polestar 2, which is kind of just a basic looking sedan. I don't know if they're gonna actually give me the Polestar 8s on here. See all the models. Just give me the models. I believe it was 65,000, Big Eb. So you look at it. I don't know. It's not hideous. It's not like a Prius. No offense. Sorry for you Prius owners out there. I just can't stand the Priuses. I'm just not a big fan. That is way more attractive than the Prius. But that's the 3, which, now you're getting your soccer mom electric van. Then you get down here to the, they're not even going to show it to me? Come on, go show us the 8. You got to show us the 8. Oh, they only have the 1, 2, and 3 on here. At the store, they had the 8, and that was awesome. It was a sleek looking super race car sedan, might be a hypercar. It was pretty cool. Anyway, let's see. What does he, Michael? Tesla doesn't pay a dividend, then, like you say, PE is just too high. It's not about the dividend, though. Michael, we've covered this in the past, but you have 2 ways to go here. If a company is a slow-moving, not a lot of volatility value play, Ford, General Motors, right? There's not a lot of real promise for massive upside gains in those, right? The electric vehicle might change that for them, but for right now, we'll just say that Ford and General Motors don't have great growth prospects. Yes, they're going to continue selling cars. There's not major innovation that's happening there. Fine. They pay a dividend. Why? Because if there's no prospect for you to grow your company through investment into infrastructure, then you need to retain your shareholders by giving them something. If you're not going to give me growth of the share price, then you better give me a dividend. And that's the point that we've made in the past is Tesla is not going to pay a dividend. Why should they? They're taking everything that they earn and they're building out more factories. They're growing exponentially. So to look down on Tesla because they're not paying a dividend is foolish, right? Know that money they would be giving to you as a shareholder is going out to buy buildings, infrastructure, robotics, expansion, and that's going to drive the share price of the shares you own even higher. So you typically get one of two. You're going to have a slow growth company that pays a dividend, and some people get hooked on dividends like it's an opium addiction. Don't do that. Other people looking for high value growth stocks, which may have an astronomical share price, but the prospect for the future could be much, much greater from a percentage gain. You're like, oh, well, great. I'm collecting my 3% dividend that they pay me. Who cares? I'm making 30% per year on the gains of my underlying Tesla stock. That's the big difference in valuations there. Now, should you run away from dividend plays? No. But I don't think you should focus on dividends. Dividends aren't that critical. I'd much rather have something that has great upside potential for my share price than have a whole portfolio of stocks that pay me a 2, 3, 4% dividend. Big deal. I'd rather have the 30, 40, 50% gainer in the share price and erase all that dividend payment. They had the 8 at San Diego store. It was supercar, right? I was like, that's the one I want, but they don't even have it on their website here. Kind of disappointing. EV makers have such weird names. Hey, I guess you got to differentiate your name, yourself from the industry, right? And Lori, that's kind of a point I tried to make there at the end. I'm not trying to attack anybody that wants dividends, but I think you need a combination, right? Now let's take a step back. If I'm someone who's near retirement, right? Let's say I'm 65. I probably don't want to have a lot of those growth stocks or high PE stock. The volatility might just be too much for me. Plus, as I'm nearing retirement, it's much more critical that I know I have set income streams and predictability, and that's where dividend stocks can be great, right? So should someone who's retiring right now be loading up on Tesla? Probably not. Should somebody in their 20s and 30s who have a long time horizon be buying Tesla? I certainly think they should have more exposure to Tesla than a General Motors or a Ford. But yeah, have a bit of both. Yes, and Lamborghini's joining the market too. It's funny, Lamborghini always have these just amazing cars and super performance. It's going to be hard to see who can beat Tesla's performance. That plaid ludicrous mode, launch control thing, that is just absolutely insane for anybody who is a vehicle fan. All right, let me go to some other quick questions here. I've received a bunch of emails from you, which is awesome. I'm going to try to get to those this week. I've just been really busy. I was supposed to work on my book like at least an hour a day, and I have done very little. I have to get it done by my birthday, and I realize I've got a long way to go to finish that book. Den says, saw the Fisker Ocean in their new showroom in London. Looks pretty good. Yeah, the Fisker Karma, I loved the look of the Fisker Karma. And the Karma was like the original one that Fisker came to market with. And I was like, that's the car, right? That way better than Tesla looks-wise, right? If you look at the Tesla sedan and the Karma side by side, oh man, Fisker is super sexy. However, I've done a lot of research on these things, and a lot of the car gurus out there just give it a big thumbs down on reliability, mechanics, function. The old Fiskers, you can find them pretty cheap right now because they just kind of fizzled out. And I think the company went through bankruptcy and then was sold to a Chinese firm. But now they're making better vehicles. The one part, if you are looking at an electric vehicle, that's a big consideration for me if I decide to get one. Right now, I'm not in the market for one. I'll take my gas guzzler. I have no problem with that. Big consideration is going to be the validity of the company, meaning how long is that? Do you think that company is really going to make it? If you're not sure they're going to make it, then you probably don't want to buy that vehicle because they'll just discontinue, and then parts are going to be impossible to get. One thing I would like to, it was funny, we have my friend Chris who works in a repair shop and a body shop, and he knows, you start seeing more and more Teslas, you're going to have more availability to parts and pieces out there, which becomes great for anybody who has a vehicle. Lowers your repair costs significantly. So I would look at see who is going to be around, who's got supply, meaning I need inventory out there, so in case I need replacement stuff, who's got the parts. A lot of these companies are just trying to build the car right now and don't have that kind of infrastructure part with all the pieces and parts available. So that would be a consideration for me. Does market volatility kill the investing in high dividend stocks? does market volatility kill the appeal of investing in high dividend stocks? No, I actually think that the more volatile market you have, the more prone I think people would want to look at dividend stocks, right? If you're someone who's relying on consistency in the market, and we have these massive wild swings, so I think you'd be more inclined to go towards dividend paying stocks because they'll most likely have lower fluctuations of price because the growth prospects are lower. It's just going to be slower growth. But at least you have the consistency of dividend payments. If I personally would do more market timing in a high volatility period. That's why, the question from John earlier or from Todd, is Tesla buy at 220? There's some of you who would argue that it'd be a buy much lower. Well, I just think having fallen 30% on the cusp of some really good news, that you're going to get these big swings, and I'm trying to time that market, and this may be that bottom point for a little while, right? Who knows where it's ultimately going to go, but I think that if you have huge volatility, it will make more people look towards dividend stocks because they want the consistency, particularly those that are looking, or those that are don't like volatility. I love volatility, so bring it on. The more the merrier. They need to change their front end on the Rivian truck before I would ever consider it. The clown face, those stupid looking headlights. I'll admit, I'm right there with you, Big Ed, but I have to say it's kind of growing on me. I see a lot of Rivians around here now, but I wonder if you could buy like a replacement kit for those headlights. I'd rather have some different headlight too. I like what the Ford, is it the Ford Lightning? I think it's the Lightning, has just like this solid bar, like a light bar that goes across the front. I think that was pretty cool. All right, what other questions did I have? So this was kind of on the same lines from John. John says, we're looking to buy General Motors. What do you think? Well, let's bring up the chart of GM here just so you guys can take a peek at that one. I don't think Tom is here today, but this is one that Tom should be looking at, right? This is a Tom Bar special. And what do I mean by that? For those who don't know, Tom is one of our resident participants who is a regular on this program, and he loves doing iron condors, iron butterflies, basically spread trading within a range. He wants things that are going sideways. And you look at General Motors, you've got this bottom level down here right around $30, and it's currently trading at 33. I'm not that big on General Motors, particularly. I really am not that excited about General Motors as a company. However, if you're looking to make money and look at income streams, this might be a good one, right? If you can get enough premium for those 30 puts down there, why not? And maybe even go a little bit tighter. If you want to do something on a weekly basis, maybe go for those 32s. So yeah, you're down to the very bottom of the range. Why not? I'm not a big fan of the company overall, but I do think, and Tom is an engineer at GM. Yeah, I knew he's in the automotive industry. Yep. So I like it, John. I don't really care for the company. And again, this is why I love being a trader, because I can look at that price chart and I don't really care what it is. As long as it's not biotech or pharmaceutical, or Apple, because I can't trade that one. It's one of my steadfast rules. But you're stuck in a nice range near the bottom of it. Why not? Sell some puts on it. Go for it. Maybe buy some calls. They're going to be cheap down at this level. Let's see. Merlin, is the overall PE of the market and the advanced decline chart tell you anything right now? I hate to say it, skills document. I don't care about the advanced decline line. One thing that I think most of you have learned about me is I don't look at a lot of stuff. I used to look at the tick. I used to look at the trend. I used to look at the ADX and advanced decline lines and all those ratios. And I just found that it's one more thing for me to take a look at. I would make the analogy for our old people in the room that have driven a stick shift before, right? When you learn to drive your stick shift, your parents were like, okay, watch that tachometer, right? That's the revs of the engine. When it gets to 3,500, I want you to shift, right? So you're just glued to that thing going, 3,500 shift, 3,500 shift. That's how I was taught. Maybe your parents are hot rodders and told you to go to 4,000, but 3,500 is where I was told to shift. And for my first, few months of driving, every time I'd shift, I was staring at that thing to make sure I shifted at 3,500. I think you would all agree that after a year of driving, maybe two, I'll never look at the tachometer again because my ear knows, it's trained to know what the sound of that engine is like at 3,500 RPM. So you can just go, and you know exactly that moment. So I look at a lot of this stuff as filler fluff to help you read what the market's doing. Now, the advanced decline line is saying, how many advancing issues do you have to declining issues? And a lot of people look at that as an overall indication of health. Now, that's been a problem for us lately because the real advancers, we've had far more decliners than we've had advancers. And it's just these couple of few handfuls of big names that are dragging everything up. That's bad overall, but I don't particularly look at the advanced decline line for that or PE ratios. And we can go out and look at SPY here real quick. So let me just really quickly bring this up for you guys. There's that one. Let's go to SPY. Bring up the S&P 500, and your PE ratio right now on the S&P is a bit high, right? 22. Typically, 15 to 18 is a historical average for PE ratio. So we're a little bit high, but it's not that crazy. Is that a piece right there that tells me I need to short the market or the market's done? No. The phrase that's more powerful than all the stuff I just mentioned is the markets can remain irrational longer than you can remain solvent. That's bullish or bearish. So even though we've got a higher PE ratio right now for the S&P, not that worried about it. I'm really going to be focusing on what the price chart tells me. And skills document, that's your game, right? You're a chart guy. So you can be manipulated by this advanced decline line. You can be manipulated by PE ratios. Don't. Just go out there and whatever that market's showing you. To me, that's the easiest way. Let's see, good show, Merlin. Mark says, sold puts to get all my 5,400 and got them to put me 2 weeks ago. I think I'll hang on. At least we break through 420 until we break through. Hopefully we see 700, 800. Are you talking SPY? Let's look at that. Let's run through those top markets here so I can wrap things up. I doubt the dog park's open today. You look at this right now, and we talked about the S&P 500 ready for a pullback a couple weeks ago. Right? We just kind of felt it overextended itself. And in hindsight, yes, it did pull back. That's not me trying to pat myself on the back. It's just the nature of markets, right? When you have a big, aggressive move without any pullbacks, that generally means the next pullback is going to be pretty severe. So we have that pullback, came very close to this demand zone, which is right around June 26th. And, this, if it's still an uptrend, this is your logical bounce point. Right? That's why I kind of really like the way we ended on Friday. Came right back down into that demand zone, and now a bounce out of it. So the question for me becomes, where do we head? Are we headed to 445? Are we headed to 448 up here? Or is this going to be just a dead cat bounce and all of a sudden it breaks those lows? That's why on the options trades that I did today, I took the ultra conservative approach. I know some of you probably don't like that, but just being transparent and honest with you, I'll show you the other one too. We had Fortinet, right? So I ended up with 500 shares of Fortinet, which is FTNT. This one I did a little bit different. So my initial strike, I had multiples last week, but let me put it back here just so we can have it. 58 was the strike that I had on Fortinet. Put it there. So I put those shares on Friday. Ended up with 500 shares of Fortinet today. Great gap up, puts me in the money. And I could have sold the calls they would already be in the money if I sold the 58s, and I would have collected a nice penny. I actually ended up going a little bit further. Instead of doing the 58s, I sold the 59s. So that puts me up to here. Just giving a little more room to run on Fortinet. I actually think you'll probably see over the next few months, probably by the end of the year, we'll close that gap, which maybe I should just hold on to my Fortinet. But I ended up collecting another 58 cents worth of premium, which is 1% extra on top of letting it rally a full dollar. So the way that trade would work out, for those of you who are doing the math, I bought it at 58. If it goes to 59 or higher, I'd make $500 because I have 500 shares. That's $1 from 58 to 59. I collect that dollar. But I'm also going to collect 58 cents for premium on the puts or the calls I just sold. And I sold $1.05 initially to collect premium when I sold those puts. So that's $1.63. Okay, so take half of that. That means I'm going to get another. I'm trying to do the math in my head, trying to come up with my actual price here of gain on this specific trade. That's 63 times 2, and cut it in half. Now my math is gonna mess me up here. It's another $800. So that should be about a $1,300 winner on 500 shares of Fortinet in less than 2 weeks. If it gets up to 59, if it doesn't, great. That's fine. I'll collect that premium and we'll see what happens at the end. And by the way, I did that for Friday, right? So I did on Friday. I did, Big Ab. I had the 55s and then I sold again the 58s. I did two on that one. The first one was a smaller trade. The second one I put 5 on, which is still small, but yeah. So I've now put those 500 shares at 58. And then let's see the last two. Silver. So here's the silver trade. So I had silver put to me, some at 21, some at 21.50. Great day today. I sold the 21.50 calls. And that's right where my strike price was. And it's only because I'm just not that comfortable with the size of silver I have right now. I've got a lot. I have a lot of silver right now. So I sold the 21.50s. Initially, I collected on one. I collected 30 cents. The other one I collected 22 cents. And then today I collected 17 cents on that. So that will be a fairly nice winner if it does get up there. If it closes again and doesn't have a pullback, I'll probably sell the 22s. But that's all for this Friday. I did them very short term. I wanted to try to capitalize on just this week and see what I could get for the week. So there you go. That was the Fortinet. That was my Tesla and my silver trades. At the end of it, if you guys want, I'll do a spreadsheet and show you all the steps and how it all added up and what the ultimate number was, if you want that. If not, that's no big deal. If you take the 7 big names out of the S&P, the PE is more in line with historical norms. Correct. Yep. And that's the problem. That's why if you look at the advanced decliners, it kind of skews things. How are you going to use that? Right, you got to go back through and find out which are those big 7 ones we all know, right? Apple, Tesla, Microsoft, Meta, Google, Amazon, and Nvidia. They're pretty much the main reasons our markets are up so much this year. Alan says, maybe AI can make you a picture of silver coming out of your ears. I should, what I should do? All right, let me see that. I'll see if I can make a Scrooge McDuck one. It's funny, one of my friends, I was talking to him this weekend. He's a bartender, and he was talking about some trades he was in. And I was like, yeah, I got to put some more silver. He's going, man, you're crazy for silver. And I don't know why. I'm surprised that's never been brought up by one of you. I'm surprised one of you hasn't been like, why so much in silver? Why not go with gold? It's got a higher price point, which means you can buy or sell fewer options contracts. You save on commissions. I'm like, well, you know what? I'm addicted to what works. And for some reason, silver has just done really well for me over the years. Whether it's just buying the underlier, but I'm a big fan of it because it's just consistently worked. So fine, I'm cool to pay the commissions on it. Options aren't that expensive to control 100 shares, no big deal. But when you start getting into 100 plus contracts, it starts to get a little sketchy. But I'm not worried; it's fine. I will see what I can do with the Tesla, the silver coming out of my ears. I'll probably do a pretty cool job of that. Why do I trade silver, Lisa? Now you got me wondering. I'm like, why do you think I trade silver? Which ETF or stock that you like best to invest in or buy into it? So, great question, Michael. And again, all of that could almost be its own separate show. And unfortunately, I'm going to have to wrap this up here because I'm going longer than I anticipated. But it depends on what the goal is. If it's to make money off the appreciation of the underlier, meaning of that ETF, I'd have to look at each one of those in comparison. So what I typically do is I'm a big fan of this group right here, these sector ETFs. So, I've got technology, I've got utilities, healthcare, staples, building materials, industrials, financials, utilities, energy, and real estate. I've got all of those here. Now, which one do I like the best right now? I don't know. I was looking at maybe selling some puts on IYR today, but I just don't feel that confident about real estate. So I guess my answer to your question, Michael, would be the one that I like the best is the one that's going to give me the best probability of success. Whichever one I think is going to cause either my underlying investment to be profitable or my options to expire worthless, and I just keep the premium. Those are the ones that are best right now. So I don't have a definitive answer for you. I can't say that one of these is the best. There's a lot of different factors there. Time horizon is obviously a big factor. How I'm going to execute that trade, how I'm going to go towards it. Tesla stock, 5,400 shares, 420 is the old high. You got 5,400 shares of Tesla? Whew. That's a good one. That's quite a good position size there, Mark. that's a lot. You look back and you're right around 217. I think that's what somebody else mentioned about 217.50. That was your high that we achieved back here in February of 2023. We broke out of that one. Now you got this big pullback. Just the question of, is this pullback going to hold? And I do think it is going to hold. Because it trades so long, you know how it trades, and like you said, it just works for you. Yep. And this is something that you all are going to have to figure out. You all have to do it. I don't understand it. There's something that happened to me when I started trading in 1998 to probably about, 2007 or 8. And I don't know why this is, but I was a very active day trader back in 98, 99, 2000, all those years. So for me, I was always hopping around what everyone in the trading floor was talking about and what was on TV. And what I found was all of a sudden I would just gravitate towards a specific stock. And once I started doing the analysis, I realized that, I'm trading E-Trade, and I've actually been very consistent trading E-Trade stock. So that's all I traded. I just focused on that one. And for some reason, I wish that I could have some divine explanation as to why, but I was profitable on that one for about 2 years, and then it just stopped. For some reason, I could not make money with it anymore, and I switched. And it was the same thing. It's like a 2-year cycle. It was E-Trade, it was Broadcom, it was Ameritrade, Qualcomm, and there was one more. It was literally like a decade of time where I pretty much just traded those stocks. And granted, I would dabble with a couple other small things, but for some reason, those ones worked. And I'm a big fan of you analyzing your trades, because I can't tell you what's going to work for you. I mean, it's all a combination of you, your brain, psychology, how you react to everything is going to tell you what works for you. If you find that something that you've traded is working, then that's all you should be doing. Now, I don't care if it's a stock that you hate, it's a company you don't like, you just, oh God, I hate this company. If you look at the numbers and that thing is making you money, keep trading it, period. And I don't know why it happens, but it will happen. And every one of you is going to have it. You're going to have something that you trade better. You'll notice the statistics are better. You got better win ratio. You got bigger gainers. It's like, then why are you trading anything else? I don't get it. It's the nature of the chaos of the markets. And I guess on that same token, you also have to be very careful because everything works until it doesn't. So if all of a sudden you see you're going on a losing streak, scale your bets back. Go to smaller trades. And if you continually lose, then maybe it's time to start looking for something else to trade. I had to turn CBS off. Oh, yeah, Margaret. CNBC, Fox, Bloomberg. I just don't like really financial television. I like to just tune it out. One thing I really enjoyed in the past, I really do like having a trading group. I'm not in them very often, but I like going in the XLTs and being a fly on the wall and just listening to the commentary that goes on. That's better, in my opinion, because it's actual traders as opposed to puppets on TV that are getting paid to shill different projects and things like that. Oh, Michael, if you're asking about my favorite ETF for silver, it's SLV. SLV is the only one. NVIDIA will top $500 this week or sub 400 depending on Wednesday's earnings. Yeah, that's going to be a good one. Wednesday's earnings is going to be awesome. Here's NVIDIA, 471 right now. Man, just rock. There's so much hype here. I'm a little bit nervous because I think it's gotten so overhyped. I think it's way overhyped. Yes, they're doing well. Yes, they're selling a bunch, but it's a lot of it right now is hopes and dreams. I think they're producing stuff, but like the A100, that's not mass distributed out there. I mean, you can barely get a lot of their products. I don't know. I for one will be really excited to watch that earnings announcement on Wednesday. It's going to be a popcorn trade of the day for sure. But I think Big Eb, you might be right. You might be right on both of those. It might hit 500 and then fall to 400 on earnings. You could see a 100-point drop in that thing, no problem, if the numbers aren't right. But all in all, right now, it feels like they're going to beat earnings expectations. I mean, everyone's throwing their numbers around, saying how great they're going to be and all this stuff. So it's going to be a good week. All right, let's see. What do we got cooking for tomorrow's economic announcements? I will throw this one on here, and there is your Tuesday session. The 22nd of August, getting near the tail end. You have existing home sales, which I am curious to see. I expect this to start slowly drifting down the higher that yield gets for your 30-year fixed rate mortgage, right? Here's your chart of the existing home sales. Not looking so good, right? Just different. And we'll see if it gets lower and lower. I mean, notice this is not near the zero line. There's still plenty of homes being sold, but we'll see if it gets lower and lower. I mean, the historical low we've seen on this going all the way back into 2010 is 3.83 million homes sold, and that's existing home sales. We'll see if we get lower than that if these rates keep climbing higher and higher and higher. So that's your existing home sales. Comes out at 7 a.m. That's 30 minutes into the trading session. You do have two members speaking from the FOMC on tomorrow afternoon. Right, so you've got 11:30, 11:32, and 12:30. So that's an important one. And then New Zealand, a retail sales announcement, and then you have this BRICS summit. A lot of attention being focused on the BRICS countries right now. Are they going to band together? Are we going to see a BRICS currency? Tons of speculation, and that could definitely be a market mover for tomorrow as well. On the earnings front, you've got best letter. Macy's reporting earnings. You got Lowe's Companies, Baidu, Canadian Solar, Medtronics, Dick's Sporting Goods, Urban Outfitters to round out your retailers. And there's plenty more retailers coming out this week. Remember last week we had a great retail sales number, so I think all eyes are expecting these companies to have better than expected earnings. Any thoughts on how BRICS countries this week? No, I don't. I personally think that they're going to try to work together to become more solidarity between all those countries and find ways to make it more efficient for them to work together. And the more cooperation you get between those BRICS countries, the more challenging it will be for the U.S. dollar. Is it good for global markets? Yeah, I think it's good for global markets. So I don't think it's anything that's going to impact us directly yet. Down the road, it could change the way that business is being done and trade is being done. But any announcement can have a huge spike if there's something big that comes out of those meetings, and you just never know, which is why you always want to know when they're happening. Things like the Jackson Hole Symposium, and when you know these big central bankers or governments are speaking or working together on something, G7, G20, those can always have big impacts on the market. So it's just good to know that it's going on. So if all of a sudden markets go haywire, you can be like, it's probably the BRICS meeting. I'll just back away for a little bit. All right, last piece, and I will wrap up here. Ali says, I've been looking for a new home just about daily for months. Nothing even on the market to consider, and I can't get ridiculous money for my house, which is paid off. Well, I guess it all depends where you want to live. I found some really nice places recently. Man, I'd love to move back to Northern California, and some of the properties are just so amazing. But depends where you want to live. It depends where you want to live. Right now, you should get decent prices for your home. Obviously, location is going to be a biggie, and then if people can qualify for the loan for your home is another important one as well. All right, I'm going to wrap this up. If you guys have comments, questions, feedback, email is on your screen. It's TraderMerlin@gmail.com. I do have a few questions I need to get incorporated and do some research for you because a lot of you have been asking me about different things. So I'll do my best to get to those on tomorrow's show. If there's anything else you want to cover, put them down below. YouTube videos of any of the videos. I know I didn't get to them all today. I will do that on tomorrow's show. So thank you guys so much. Hope you enjoyed it, and I'm looking forward to tomorrow's show with y'all. Take care, everybody.